I get asked about Bitcoin constantly at shareholder meetings, in interviews, through letters from investors. The question keeps coming, Warren, why don't you own Bitcoin? You've missed enormous gains. Bitcoin has gone from pennies to tens of thousands of dollars. People have become millionaires. Some have become billionaires. And you, someone famous for finding value where others don't, have completely ignored what many call the investment opportunity of a lifetime. So let me be absolutely clear about my position. I will never buy Bitcoin. Not at $10,000, not at $1,000, not at $100, not even at $10. I wouldn't buy it at any price because fundamentally Bitcoin is not an investment. It produces nothing. It has no intrinsic value. And everything I've learned about successful investing over 75 years tells me that buying Bitcoin is speculation at best and foolishness at worst. Today, I'm going to explain exactly why I'll never buy Bitcoin, what's wrong with the entire cryptocurrency concept, and most importantly, what I buy instead that actually creates wealth rather than just hoping someone else will pay more for a digital token than I did. Let me start with the most fundamental question in investing. What is value? When I evaluate any potential investment, I ask what cash flows it will generate over its lifetime, discounted back to present value. A farm produces crops that can be sold. An apartment building produces rental income. A business produces goods or services that customers pay for, generating profits. These assets have intrinsic value because they produce something. The value comes from the productive capacity of the asset, not from what someone else might pay for it tomorrow. This is the foundation of rational investing. You're buying future cash flows. Bitcoin produces nothing. It generates no cash flows. It doesn't pay dividends or interest. It doesn't produce crops or rental income or widgets. It's a digital token that exists on a blockchain. Its only value is what the next person is willing to pay for it. This is not investing. This is the greater fool theory. You're buying something not because it has intrinsic value, but because you hope to sell it to a greater fool at a higher price. That's speculation, not investment. And speculation is a game where most participants lose money over time because they're relying on timing and luck rather than fundamental value creation. Let me give you a comparison that makes this clear. If you buy all the Bitcoin in the world, you'd have a digital ledger showing you own a lot of Bitcoin, but you couldn't do anything with it except try to sell it to someone else. It doesn't produce anything. Now compare that to buying all the farmland in the United States for the same amount of money. You'd own millions of acres producing corn, wheat, soybeans, cotton, all the crops that feed the country and the world. Every year that farmland would produce crops worth hundreds of billions of dollars, you could sell those crops, collect the revenue, and still own the farmland to produce more crops next year. That's productive value. Or compare Bitcoin to buying 10% of all the businesses in the S&P 500. You'd own pieces of companies making iPhones, selling insurance, transporting freight, manufacturing pharmaceuticals. Those companies would generate hundreds of billions in profits annually, pay you dividends, and still be worth something because they produce goods and services people need. Bitcoin produces nothing. It's not even a close comparison. The Bitcoin enthusiasts will argue that I'm missing the point, that Bitcoin is valuable as a store of value, as digital gold. They say it's scarce. There will only ever be 21 million Bitcoin, and that scarcity creates value. Let me address this argument because it's important. Scarcity alone doesn't create value. Many things are scarce that have no value. Original paintings by unknown artists are scarce, one of a kind, but they're not valuable. What matters is not scarcity, but utility combined with scarcity. Gold is valuable because it has industrial uses. It's used in jewelry. It's been a store of value for thousands of years across all cultures, and it's scarce. The combination of utility and scarcity creates value. Bitcoin's utility is limited. You can't use it in manufacturing. You can't wear it. You can't eat it. The only utility is as a medium of exchange, and even there, Bitcoin has failed. It's too slow for transactions. It's too expensive with transaction fees. It's too volatile to be a practical currency. If you buy a coffee with Bitcoin and Bitcoin goes up 20% the next day, you've essentially paid 20% more for your coffee. What merchant wants to accept payment in something that might be worth 20% less by the time they convert it to dollars? Bitcoin was supposed to become a global currency. It hasn't. Most Bitcoin holders don't even use it for transactions. They hold it hoping the price goes up. That's speculation, not currency. The comparison to gold is particularly misguided. Gold has been valuable for 5,000 years across every civilization. It has industrial uses. It has aesthetic uses in jewelry. Governments hold it as reserves. It's universally recognized as valuable. Bitcoin has existed for 15 years and only a fraction of the world's population owns any or even understands it. Comparing Bitcoin to gold is like comparing a 15-year-old startup to a 5,000-year-old institution. There's no comparison in terms of established value. But here's what really troubles me about Bitcoin. It's based on the hope that governments won't regulate it out of existence. Bitcoin enthusiasts like to talk about how it's decentralized and beyond government control. But that's naive. Governments control the on and off ramps between Bitcoin and real currency. If governments decided Bitcoin was a threat, they could make it illegal to convert Bitcoin to dollars or euros or yen. They could ban businesses from accepting it. They could shut down exchanges. And suddenly, your Bitcoin becomes nearly worthless because you can't convert it into anything useful. China has essentially banned Bitcoin. India has been hostile to it. The United States could do the same if politicians decided it was facilitating money laundering, tax evasion, or other illegal activities. And make no mistake, Bitcoin is used extensively for illegal purposes. Drug trafficking, ransomware payments, sanctions evasion, all facilitated by cryptocurrency. That's not speculation. It's documented fact. Governments tolerate Bitcoin now because it's a relatively small part of the economy. But if it became large enough to threaten government control of money supply or facilitate widespread crime, regulations would come down hard, and anyone holding Bitcoin would discover that decentralization doesn't protect you from government power. The energy consumption of Bitcoin is also staggering and unsustainable. Bitcoin mining, the process of validating transactions and creating new Bitcoin, consumes as much electricity as entire countries. Argentina, Norway, Ukraine, these are countries with tens of millions of people, and Bitcoin uses as much electricity as all of them. This is electricity that could power homes, hospitals, schools, factories. Instead, it's being used to solve complex math problems that serve no productive purpose except to maintain the Bitcoin blockchain. This is economic waste on a massive scale. It's using real resources, real energy, to create something with no intrinsic value. That's the opposite of productive investment. Now, let me talk about volatility, because Bitcoin's price swings are extreme and completely inconsistent with any reasonable use as currency or store of value. Bitcoin has gone from $20,000 to $3,000 and back to $60,000, then down to $15,000, then back up to $40,000, all in the space of a few years. These are 60, 70, 80% swings. Gold doesn't move like that. Currencies don't move like that. Real assets with intrinsic value don't move like that. Only speculative assets driven purely by sentiment and momentum exhibit this kind of volatility. If you need to use your wealth in the next year or two and it's stored in Bitcoin, you face the very real possibility that it could lose half its value before you need it. That's not a store of value. That's a casino. And the volatility makes Bitcoin useless as a currency. Businesses need stable currencies to plan, to price goods, to enter contracts. Nobody wants to enter a contract denominated in something that might be worth 50% more or 50% less in 6 months. The volatility that Bitcoin enthusiasts celebrate as evidence of opportunity is actually evidence that it has failed as currency or store of value. I also find the entire concept of cryptocurrency philosophically troubling. The idea that you can create value out of thin air by solving math problems, that you can make a currency without any government or institution backing it, that code and algorithms can replace trust in institutions, it's fantasy. Money works because governments and central banks stand behind it. The dollar works because the full faith and credit of the United States government backs it. Yes, governments can mismanage currency through excessive printing and inflation, but at least there's an institution responsible, an entity that can be held accountable. With Bitcoin, there's no one responsible. If something goes wrong, if there's a problem with the blockchain, if quantum computing breaks the encryption, there's no central bank to fix it, no government to bail anyone out. You're on your own. The libertarian dream of currency outside government control sounds appealing until you think through the implications. Governments control currency because controlling currency is essential to managing economies. In recessions, central banks cut interest rates and increase money supply to stimulate activity. In inflations, they raise rates and contract money supply to cool the economy. This is monetary policy, and while imperfect, it's necessary. Bitcoin can't have monetary policy. The supply is fixed by algorithm. During the Great Depression, having a fixed money supply made the depression worse. During the COVID pandemic, the ability of governments to print money and support economies prevented complete collapse. Bitcoin offers no such flexibility. Its supposed virtue of fixed supply is actually a fatal flaw for any real currency. So if I'll never buy Bitcoin, what do I buy instead? Let me be specific, because this is the important part. I buy productive assets that generate cash flows. Businesses, farmland, real estate, these are the building blocks of wealth creation. Let me walk through each category and explain why these are infinitely superior to Bitcoin. First, businesses. Berkshire Hathaway owns dozens of operating businesses and large stakes in many publicly traded companies. We own BNSF Railway, which transports freight across North America, generating several $1 billion in annual profits. We own Geico, which sells auto insurance, generating over $1 billion in underwriting profits plus investment income from float. We own See's Candies, Dairy Queen, NetJets, Clayton Homes, Precision Castparts, Berkshire Hathaway Energy, and dozens more. Each of these businesses produces goods or services that customers pay for. Each generates profits year after year. Each creates genuine economic value. When I buy a business, I'm buying a stream of future cash flows. I can estimate what those cash flows will be based on historical performance, competitive position, and management quality. I can value the business rationally. If I pay a reasonable price relative to those cash flows, I'll earn good returns as the business generates profits. And here's the key. Those returns don't depend on what someone else will pay me for the business tomorrow. They depend on the business's ability to generate cash. Even if the stock market closed and I couldn't sell, I'd be fine because the business keeps generating profits. I can either reinvest or distribute. Compare that to Bitcoin. If the Bitcoin market closed tomorrow and you couldn't sell your Bitcoin, what would you have? A digital token that produces nothing, that you can't use for anything productive, that has value only if you can find someone to buy it. See the difference? One is a productive asset creating value. The other is a speculative token whose only value is what others will pay. Second, I buy stakes in publicly traded businesses through the stock market. Berkshire owns significant positions in companies like Apple, Coca-Cola, American Express, Chevron, and Occidental Petroleum. These are real businesses with real products, real customers, and real profits. Apple sells iPhones, iPads, computers, and services, generating over $400 billion in annual revenue and $100 billion in profits. Coca-Cola sells beverages in over 200 countries, generating over $40 billion in revenue and billions in profits. These companies pay dividends, buy back shares, and grow their intrinsic value over time. When I buy stock in Apple or Coca-Cola, I'm not hoping someone will pay me more for the stock tomorrow. I'm buying a fractional ownership interest in a business that generates enormous cash flows. If the stock price stays flat for 10 years, but the business continues generating profits and paying dividends, I still make money. The returns come from business performance, not from speculation on price movements. This is genuine investment, not speculation. Third, I buy real estate and farmland. Berkshire Hathaway Energy owns thousands of miles of natural gas pipelines, electricity transmission lines, and renewable energy installations. These are real assets producing real energy that customers pay for. We also own real estate through various subsidiaries. At a personal level, I've invested in farmland over the years. Farmland produces crops. You plant corn, it grows. You harvest it, you sell it, you make money. The next year you do it again. Farmland is a productive asset that generates returns through agricultural production. Compare farmland to Bitcoin. With farmland, even if the price of farmland never goes up, you still make money from crop production. With Bitcoin, if the price doesn't go up, you make nothing because Bitcoin produces nothing. The farmland keeps generating value year after year. Bitcoin generates zero. The farmland could last for hundreds of years, continuously producing crops.
Bitcoin is a digital construct that could be made obsolete by new technology or government
action. There's no comparison in terms of fundamental value and permanence. Fourth, I buy bonds when they offer attractive yields. Bonds are loans to governments or corporations that pay interest. A treasury bond paying 5% gives me 5% return every year, regardless of what happens to the bond's price. It's a contractual obligation. The U.S. government has never defaulted on its bonds. Even corporate bonds from quality companies are highly likely to pay their promised interest and return principal at maturity. This is reliable income based on contractual cash flows. Bitcoin pays no interest, no dividends, no income of any kind. Its return is entirely dependent on price appreciation, which depends on speculation and sentiment. A portfolio of bonds generating 5% annually is infinitely more reliable and rational than a portfolio of Bitcoin that might go up 100% or down 50% based on nothing more than what other speculators are willing to pay. Now let me address the argument that I've missed out on huge gains by not buying Bitcoin. It's true that someone who bought Bitcoin at $100 and sold at $60,000 made enormous returns. But that's not investing. That's winning a speculation game. For every person who made money on Bitcoin, there's someone who lost money. The person who bought at $60,000 and sold at $20,000 lost 2/3 of their money.
Bitcoin is a zero-sum game minus transaction costs. The gains of winners come directly from the losses of losers. There's no net value creation because Bitcoin produces nothing. Compare that to genuine investment. When I bought Coca-Cola in 1988, I paid about $1 billion for our stake. Today, that stake is worth about $25 billion. But here's the key. That gain didn't come at someone else's expense. Coca-Cola created value by selling billions of cases of beverages to happy customers. The company generated profits, paid dividends, grew its business. The value was created, not just transferred from one speculator to another. This is positive sum wealth creation, which is completely different from the zero-sum speculation of Bitcoin. The other problem with the missed gains argument is that it's cherry picking. Yes, Bitcoin has had enormous gains over its lifetime. It's also had multiple crashes of 70 to 80%. If you bought at the wrong time, you lost most of your money. And there's no rational way to determine the right time to buy because there's no underlying value to analyze. With stocks, you can analyze business fundamentals and buy when price is below value. With Bitcoin, there are no fundamentals. It's pure speculation on price movements driven by sentiment. That's not a game I'm interested in playing. Let me also address the inflation argument because Bitcoin advocates claim it's a hedge against inflation. The idea is that governments are printing money, causing inflation, and Bitcoin's fixed supply protects against this. There are several problems with this argument. First, if you want inflation protection, buy real assets like farmland, real estate, commodities, or stocks of companies with pricing power. These assets produce income and can raise prices with inflation. They have genuine inflation hedging properties proven over centuries. Bitcoin has existed for 15 years and hasn't proven anything about its inflation hedging properties over full economic cycles. Second, the inflation argument assumes governments will keep printing money recklessly. While that's a risk, it's not certain. And even if it happens, there are better hedges than Bitcoin. Gold has been an inflation hedge for 5,000 years. Real estate has been an inflation hedge for thousands of years. These are proven stores of value. Bitcoin is a 15-year-old experiment that could fail for any number of reasons. Third, Bitcoin's price movements have shown little correlation to inflation. When inflation surged in 2021 and 2022, Bitcoin crashed from 60,000 to 15,000. Some inflation hedge, it moved based on speculation and risk appetite, not based on inflation dynamics. Real inflation hedges like commodities, energy stocks, and real estate perform much better during that inflationary period. The idea that Bitcoin is an inflation hedge is not supported by actual data. Now, let me tell you what I tell young investors who ask about Bitcoin. If you want to speculate,
with a small amount of money, you can afford to lose completely, fine. Take 1% of your wealth and buy Bitcoin or lottery tickets or put it on Reddit, the roulette wheel. If you get lucky and make money, congratulations. But don't confuse that with investing. Don't put serious money into Bitcoin. Don't bet your future on something that produces nothing and has value only if someone else will pay more for it tomorrow. Instead, focus on building real wealth through productive investments. Buy index funds that give you ownership in hundreds of profitable businesses. Buy real estate that generates rental income. Start a business that provides value to customers. Invest in your own skills and education to increase your earning power. These are the building blocks of genuine wealth. They create value rather than just transferring it from one speculator to another. They generate cash flows rather than depending on price appreciation. They're proven over centuries rather than being 15-year experiments. The fundamental difference between Bitcoin and real investments comes down to this. Real investments are productive. They create value. They generate cash flows. They improve people's lives by providing goods and services. Bitcoin does none of these things. It's a digital token that exists solely for speculation. And speculation is not how you build lasting wealth. You might get lucky and make money. But over long periods, over full careers of investing, the people who build real wealth are those who own productive assets, not those who speculate on price movements of tokens that produce nothing. I've built a fortune of over $100 billion by buying productive assets and holding them long term. I've never bought Bitcoin. I've never bought gold. I've never bought commodities for speculation. I buy businesses, farmland, and occasionally bonds. These are assets that produce cash flows and create value. This strategy has worked for me for 75 years across every kind of economic environment. It's worked through recessions, inflations, wars, pandemics, technological change, everything. And it will keep working because the fundamental truth never changes. Productive assets create value. Speculative tokens do not. So that's my answer on Bitcoin. I'll never buy it at any price because it violates every principle of sound investing I've learned over my lifetime. It produces nothing, has no intrinsic value, generates no cash flows, and depends entirely on the greater fool theory. When people ask what I buy instead, the answer is simple. I buy productive assets that create value, businesses that generate profits, farmland that produces crops, real estate that generates rents, assets that improve the world by providing goods and services people need while generating returns for owners. That's investing. That's wealth creation. That's what works over time. And that's what I'll continue doing, regardless of how high Bitcoin goes or how many people tell me I'm missing out.